Now we'll be starting with our discussion on the CA final direct tax laws paper, which was held yesterday, November 2020 examination, new syllabus. Now first question, it's a comprehensive question, which is dealing with what? The computation of total income, basically, total business income of a company that is being asked in this particular question. And what the question states is, MP Limited is engaged in manufacture of textile manufacturing company since 1st of May 2010. Its statement of profit and loss for the financial year ended 31st March 2020 shows a profit of rupees 560 lakhs after debiting or crediting the following item. It's the following items basically. 560 lakh is the profit after debiting or crediting the following. Number one is depreciation charged on the basis of useful life of the assets as per the Companies Act is rupees 52 lakhs. Now depreciation charge is rupees 52 lakhs. So as per Companies Act, same will be added back. Same will be what? Added back. And the depreciation as per the provisions of the income tax law will be allowed as deduction. Now next one is the industrial power tariff concession of rupees 5.40 lakh received from Madhya Pradesh government was credited to statement of profit and loss. Now this industrial power tariff concession, basically it is a revenue receipt. It is what? A revenue receipt. And when the same has been credited to profit and loss account, is rightly credited, therefore as such no adjustment will be required in such a case. And this has been also judicially decided in Rassi Cement's case. Okay, it's judicially decided in Rassi Cement's case here, and was also earlier asked in the examination also. Now next is contribution of rupees 2.50 lakhs to scientific laboratory. They have contributed to a scientific laboratory functioning at national level. So basically it is a national laboratory, and they have contributed this with a specific direction. Here the direction specific for use of the amount for scientific research program approved by the prescribed authority. So if we make any payment to national laboratory or Indian Institute of Technology or other specified person for approved program, then the provisions of section 35(2)(a) is applicable. And for your assessment year, that is 2021, 1.5 times of the sum so paid is allowed as deduction under section 35(2)(a). So here 2.5 lakhs has been debited, so 2.5 lakhs will be added back, and 1.5 times of 2.5 lakhs will be what allowed as deduction. From assessment year 21-22 onwards, weighted deduction is say not admissible in this particular case. Then next is profit of rupees on sale of plot of land to AVM Limited, a domestic company. Profit of 8 lakhs on sale of plot of land to AVM Limited, a domestic company, the entire shares of which are held by the assessee company. Now say if a holding company here, holding company transfers a capital asset to its 100% subsidiary company, and the transferee company is an Indian company. If it's an Indian company, then that said transaction is not regarded as what? Transfer. Here, therefore, the capital gains taxation will not rise, as well as this profit will be reduced from while computing the profits and gains of business and profession. So this won't be chargeable to tax under the head capital gains. And next is payment of rupees 3.50 lakhs towards transportation of various materials procured by one of its units to Mr. Bansal Transport. It is a partnership firm. We have made a payment of freight of 3.50 lakhs without deduction of tax at source. The firm opts for presumptive taxation under 44 AE and has furnished a declaration to this effect. And it's also furnished its permanent account number in the tender document. Now here, since the firm has opted for the provisions of 44AE, it must be owning not more than 10 goods carriages, and is he given this declaration as well as a PAN, so there will be no requirement of TDS. There will be no requirement of what? TDS in such a case. When there is no requirement of TDS, then provisions of 40A 1A won't be applicable, and no disallowance can be attracted in the hands of the company while making payment of rate of rupees 3.50 lakhs. Now here they say that bonus paid to staff includes an amount of 1.50 lakhs which was provided for in the books as on 31/3/19. So they have made a provision for this bonus, but has been paid in August 19. The same has been paid in August 19. Now the issue here is that what is a bonus to staff? So bonus to staff is deductible as per the provisions of section 43B. 36(1) 2 read with what? Section 43B. Now here, if any bonus is paid to staff, this payment must be made on or before the due date of furnishing the return of income. Then it will be allowed as deduction to the previous year to which it relates. Otherwise, the same will be allowed as deduction in the year of payment. Now here, they have what? Made the payment in August 19. Say due date is what? We presume the due date to be what? 30th of September. Hence, the payment has been made on or before the due date. So this would have been allowed in the financial year 18-19. This would have been allowed in financial year 18-19. In the above information, they are saying after debiting or crediting the following. Now again, in case they have debited this amount which has been paid during the current financial year, 1,50,000, if it has been debited to the profit and loss account, this has been, say, wrongly debited in the sense that it would have been allowed in the earlier year. So here, the profit has been, say, reduced to the extent, therefore, this was allowed in the earlier year, so adjustments will be required for the same. In case, if the same has been paid after, say, 30th of September 19, if the same has been paid after 30th of September 19, then in that particular circumstance, we have to see the deductibility in this particular year. Next is interest of rupees 15 lakhs paid on loans taken specifically for purchase of plant and machinery. Interest of 15 lakh is paid on loans. Here taken specifically for purchase of plant and machinery. Out of this, 5 lakh is for the period till such machinery was commissioned. So here interest relating to the period prior to the date when machine was put to use. When machine was put to use, that is what capitalized in the cost. Hence, this has been wrongly debited, it will be added back. Then necessary depreciation would be provided in respect of the same also. Then a debtor who owed the company an amount of 20 lakhs was declared insolvent and hence was written off by debiting the statement of profit. So hence, under 36(1)(7), in case if it is bad debts which is written off as irrecoverable in the accounts. If the same is written off as irrecoverable in the accounts, it would be what? Allowed as deduction. So it has been written off as irrecoverable in the accounts, therefore the same would be what? Allowed as deduction. It is already debited, hence no adjustment as such will be required. It's already debited, therefore no adjustment as such will be required. Okay. Next is what? Rupees 5 lakhs being additional compensation received from state government pursuant to an interim order of court in respect of land acquired by the state government. So here, if any amount has been received as an interim order, that won't be taxable until the award is finalized. It has been held. Therefore, this 5 lakh rupees will not be what chargeable to tax till the award is, say, finalized. So here taxability will not arise under the add capital gains in this particular case, and this 5 lakh has been credited in profit and loss account will be reduced. Next, in order to expand its overseas business, the company planned online advertisement campaign for which it is engaged Fastech Inc., a London-based company, not having PE in India, and paid 5 lakhs for the said services. No tax or TDS was deducted by the company. Now here, this is a case of what equalization levy, that is, the company is required to deduct equalization levy because its online advertisement service falls under the ambit of specified service, and when we are making a payment to a non-resident which is not having a PE in India and the amount exceeds rupees 1 lakh in that particular circumstance, we will be required to deduct, say, a equalization levy, and since equalization levy has not been deducted, same will be what? Same will be disallowed. So here, if any sum has been paid to a non-resident for a specified service which was leviable to deduct, on which equalization levy was deductible and the same has not been deducted, then as per the provisions of section 40A 1B, this amount would be what? Disallowed. Next is rupees 2 lakh is paid to consultant for expert opinion on new business setup. So here a new business was required to be set up, therefore this expenditure will be capital in nature, and this expenditure won't be allowed. Then they have provided the additional information, normal depreciation computed as per income tax rules on the books of book assets is rupees 71 lakhs. Now in case if we presume that here we have added back this 5 lakh rupees, in the cost of the machine. So this basically is eligible for depreciation. Either we can presume that this depreciation is here, say included here. Otherwise, we would say separately provide the depreciation on 5 lakh rupees at rate of 15%. Then if the company is engaged in manufacturing activity, then it's also entitled for additional depreciation. All these points are there, but the same has not been provided in how much is the cost and these aspects when the machine was purchased and when the same was put to use, that has not been provided here. So we'll be making necessary presumptions while computing this particular, depreciation in respect of that machine where interest has been capitalized. Then debenture of face value 1500 lakhs having 5 years tenure were issued at a discount of 3% and were fully subscribed. So here this 3% discount is on 1500 lakhs, 3% discount. So it works out to be 45 lakhs, and the same will be deductible during the tenure. So 5 years is the tenure, so 9 lakh rupees will be what? Deductible. That has been judicially decided by Madras Industrial Investment Corporation's case. Then company has received a bill of rupees 3 lakh on 31st March 20 from a supplier of cotton for supply made in March 20. They have received a bill. The bill was omitted to be recorded in the books of accounts in March 20. Payment against the bill was made in April 20 and necessary entries was made in books then. So here the same was considered in the closing inventory valuation during the physical verification conducted on 31st of March 20. Now here basically the entries have been made, entries have been omitted. In financial year 1920, but the same has been passed, the same has been recorded in FY 2021. In FY 2021. So this expenditure would be deductible in financial year 2021 because it has been recorded then, and we have already enhanced our value of closing stock by this amount. Therefore, this expenditure would be deductible when the same has been recorded in the books. Then company has purchased 1000 bales of cotton at 5,000 per bale from NP LLP, a firm in which majority of the directors are partners. So here it is relatives concept is there. Normal selling price in the market is 4,600. So we have made excessive or unreasonable payment. Excessive or unreasonable payment. How much excessive or unreasonable payment has been made? This is what 400 per bale, 1000 bales have been purchased. Therefore, this is excessive or unreasonable, and this will be disallowed in case if we make payment to relatives which is excessive or unreasonable, having regard to the fair market value of the goods. Okay. Compute the total business income of the company for the assessment year 2021 and give brief explanations to each items. So now we'll be starting with the computation aspect. Here, what is the net profit as per profit and loss account? What is the net profit as per profit and loss account? Look, the net profit as per profit and loss account is rupees 560 lakhs. It is what? 560 lakhs. It is 5 crore and 60 lakhs. Now add. Number 1 is depreciation as per Companies Act. Depreciation as per Companies Act. You have to write the working notes on your own. We have already discussed the same. It will be 52 lakhs. The same would be what? Disallowed. Next is number B, industrial power tariff concession. This was A, B. Industrial power tariff concession. A industrial power tariff concession credited to P&L account. No adjustment as such will be required since the same is revenue receipt. Since the same is revenue receipt and has been credited to P&L account. And has been what? Credited to P&L account. No adjustment will be required. No adjustment will be required. Okay, it's rightly credited to P&L account and it's been judicially decided by the court in Rassi Cement case. Next is what? Contribution to National Laboratory for approved program. Contribution to National Laboratory under approved program. Approved program that will be covered under section 35(2)(a), and for your relevant assessment year a weighted deduction is admissible. So here it is 2.50 lakhs. 2,50,000 will be added and 1.5 times of rupees 2,50,000, the same will be deductible. So how much amount will be deductible? It is 1.5 into 2,50,000. So it works out to be how much? That is 2,50,000 into 1.5. That is 3,75,000. Next is profit on sale of plot of land to 100% subsidiary. D point. Profit on sale of land to 100% subsidiary. The same will not be taxable under this head, and it also not taxable under capital gains because it is not regarded as transfer. How much it is? 8 lakh rupees. Not taxable under PGBP. Not taxable under PGBP. Okay. Next is number E. Payment to GTA. Payment to GTA of rate where declaration under section 44A, where declaration relating to ownership of goods carriages not exceeding 10 along with PAN has been obtained. So no need of TDS, no need of tax reduction at source under section 194C. Hence 40A1A won't be applicable in this case. It is rightly debited, therefore no adjustment required in this case. Next is what? Bonus to staff includes 1.5 lakhs. Now here, bonus to staff, it is deductible as per 43B. Since the same is paid on or before due date of furnishing ROI for financial year 18-19, same will be allowed in FY 18-19. Since it has been debited in P&L account in FY 19-20, hence it will be disallowed, because above information provided after debiting or crediting, it will be what? Disallowed. Okay. So how much amount it is? 1.50 lakhs. We are presuming that is again been debited here in P&L account. So it will be disallowed. Next is interest for purchase of plant and machinery. Interest for purchase of plant and machinery before the asset is put to use. It will be what? Capitalized. We have seen explanation 8 to 43(1), read with 36(1)(3), relating to interest on borrowed capital. So 5 lakh will be capitalized. It has been debited, therefore this will be what? Capitalized. So it will be added back. It won't be allowed as deduction while computing PGBP, and it will be added back in the cost of the machine. Relating to depreciation, we will make necessary presumptions afterwards. Then bad debts. So here, allowable as per 36(1)(7). Since the same is written off as, written off as irrecoverable. Written off as irrecoverable. Hence it will be allowed. Already debited, no adjustment will be required. Okay, since it's already debited, no adjustment will be required. Next is compensation, interim compensation. What is what? Interim compensation. 5 lakhs. Interim compensation, rupees 5 lakhs. It will be taxable in the year in which final compensation is received. Under the Act capital gains. as per provisions of 45(5). Okay, so this has been credited, therefore it will be what? Reduced. This 5 lakh rupees will be reduced. It has been credited to P&L account, therefore it will be reduced. Okay, next is payment to NR. Payment to NR for specified service which is chargeable to equalization levy as he is not having P in India, equalization levy is there, and since equalization levy has not been deducted, same will be what? Same will be disallowed. It will be disallowed as per provisions of 40 clause A, 1B, we have discussed it. How much amount it is? 5 lakhs. It is 5 lakhs here. Okay. Next is payment to consultant in respect of new business setup. So here this will be capital in nature. We are presuming it's capital in nature. This will be disallowed, amounting rupees 2 lakhs. This will be what? Disallowed here. Okay. Then we have other information. Normal depreciation less normal depreciation as per IT. Now they are saying as per book assets of is rupees 71 lakhs, and they are saying as per IT rules. Now we presume that this depreciation on machine, where interest on borrowed capital prior to put to use is capitalized. This is our presumption that is not included in 71 lakh rupees. So we will be providing normal depreciation of 15%, 75,000 rupees. We can also provide additional depreciation at rate of 20%. We presume it. Okay, that is 1 lakh rupees. Otherwise, it can also be presumed the other way that in 71 lakh these things have already been what? Included. So this is on presumption. Then discount on issue of debentures, it will be amortized during the life of debentures, less discount on issue of debentures to be amortized during the life of debenture, as has been judicially decided by the Supreme Court in Madras Industrial Investment Corporation case. How much discount it is? 1500 lakhs. 1500 lakhs into 3%. And same will be allowed in 5 equal installment because the life of debentures is 5 years. That is 45 lakhs. Divided by 3, it works out to be 9 lakh rupees. Divided by 5, sorry. It works out to be 9 lakh rupees. Next is what? Company has issued received bills for 3 lakhs on 31st March 20. Now here, expenditure of financial year 1920 recorded in books in financial year 2021, same will be deductible in FY 2021 as it is not as it is recorded in that FY. Okay, so it is not allowable in financial year 1920. We are doing for financial year 1920 year computation. Then payment we will be adding what? Excessive payment to relatives under section 40A to whatever excessive payment is there, 1000 into 1000 bales were there. We have made a payment of 5000 per bale. Actually, fair market value is 4600. Fair market value is 4600. So it is 400 into 1000, that is 4 lakh rupees. So this will give you rise to what? The profits and gains of business and profession. So we have made necessary presumptions in respect of depreciation. So how much amount of profits and gains of business and profession will be there? 560 plus 52 lakhs plus 2 lakh 50,000 minus 3 lakh 75,000. You can go through the say calculation aspect once. Minus 8 lakhs then plus 1 lakh 50,000, then 5 lakhs, then we have minus 5 lakhs, then again 5 lakhs, then we have 2 lakhs, then we have minus 71 lakhs, minus 175, minus 9 lakhs, and plus 4 lakhs. So it works out to be PGBP, business income, 5335, then 000. So it is what? 5 crore 33 lakhs 50,000. Regarding capital gains, say transfer of plot of land to 100% subsidiary, same is not regarded as transfer under section 47(4). 100% in subsidiary, which is Indian company, and interim award, it will also be not taxable, and no further other information has been provided. So this was one question which was asking you to compute total business income, and we have given the reasons. So basically it is business, they are asking focusing on business income. So we have discussed about this question. So it was normally it was an average question, and most of the points have already been asked in the examination in the earlier years, and the same was covered in our test paper also. So these points were covered in our test series also, which we are conducting, and you can go through the videos there. You can easily find out these points. So this was not very much difficult here, this particular question. Necessary assumptions were to be made, and we have solved that accordingly only. You have to write proper working notes, because main aspect is how to write the working notes, and these working notes carry a very good weightage. So working notes must be very much there, and each and every point must be there. Say whatever you are writing, working notes are there, and with a proper explanation as per the law. Then only you can score, say, good marks here. So this was our discussion of the first question relating to what? computation of total business income of the company.